let's talk about capital gains tax when you sell your primary residence, everything you need to know about the calculation and what is included in your taxable income. Firstly, you need to understand what your primary residence is and what the definition of a primary residence is. Primary residence is pretty much the house that you live in or you are ordinarily resident in. It's pretty much your house. If you're a person that has multiple investment properties, it's the one that you spend most of your time in and it's the one that you live in day to day. I'll take you guys through a live example. I'm gonna change their names. Bob and Jen purchased the property about 17 years ago. This was their primary residence. This was their house that they lived in. And basically what they did is they bought this house for a cost price of 2.7 million rand. They did renovations on that house for about 400,000 rand more. The total cost was about 3.1 million rand. They put it on the market. They decided to downgrade their life. You know, in their 60s, they want to retire. They want to downgrade, sell it up, move to a lower maintenance house. So they put it on the market. They received, 6.2 million rand is what they received for the property. So basically double their money in 17 years. Not bad. And they want to know now, so we did their capital gains tax calculation. So how did this form part of the capital gains tax? How much they paid and how did it work? So pretty much how capital gains tax works is you'll take the proceeds that you received for the year, which was 6.2 million rand. You less the base cost, which was 3.1 million rand. That gives you a capital gain of 3.1 million rand. Now, as a South African citizen, you get a 40,000 rand annual exclusion, okay, every year, annual exclusion, 40,000 rand. And because it was Bob and Jen's primary residence, you get a primary residence exclusion or allowance of 2 million rand. What you're left with is 1,060,000 rand, which is the capital gain after taking account all the exclusions. What is taxable is 40% of this gain gets added to your taxable income. So times 40%, so 424,000 rand. 424,000 rand gets added to Bob's, well, they married A and C, so Bob will incur, it's in Bob's name. So basically 424,000 rand of the capital gain gets added to Bob's taxable income. He will pay taxes, 424,000 rand on his marginal tax rate. So whatever tax rate he's on, that's what they'll get added to, and he'll pay taxes on that. Again, 60% of it is basically tax-free. So I hope you learned a little bit more about what primary residence is and how your capital gains is affected by selling your primary residence or basically your home. And if you need more information or if you want services, my link is in my bio.